Dow Chemical out with its earnings today. We talked about those in the last half hour. The company actually earning an adjusted 60 cents a share. Came in with revenue of $15.4 billion. That 60 cents a share was above what the street had been expecting of 57 cents. Dow Chemical also saying that prices increased 22% with double-digit price gains in all operating segment. It's the largest year-over-year percentage increase in price since 2005. And Andrew Liveris, as we said, is the chairman and CEO of Dow Chemical. Andrew, thanks for joining us this morning.
Nice to be back, Becky. Thank you.
All right, so we're taking a look at the numbers, and I realize this was a quarter that had some difficult numbers going on because of the two hurricanes and the disruptions that Dow Chemical faced with that. But when you take a look at the lower oil prices that we're looking at today, your price increases that are starting to kick in, what can you tell us about what you expect this quarter and beyond?
Yeah, Becky, the quarter was, as you said, challenging. It was a tale of two quarters, really. The first part of the quarter was the price increases and this huge hydrocarbon surge. Remember, we were talking $140, $150 oil back in July. So we got a lot of price increases through. And then the back end of the quarter were the two hurricanes, which took out 80% of my capacity in North America, just as hydrocarbons declined. So we lost the ability to actually have margin expansion. And, of course, on top of that, we have the topic of the day, the financial crisis and the credit meltdown and everything we're seeing. Now, go forward to your question. I mean, we really will benefit because we have feedstock flexibility. That is the one thing I have not been able to say on this show for 4 years, which is I can now start to use different hydrocarbon feedstocks because I've got some buying power, albeit for all the wrong reasons, which is demand destruction. And frankly, I think I heard Jack, and hi, Jack, it's good to see you. And I would tell you the outlook is not very good. The quarter is going forward here. The next couple of quarters, I think, are very recessionary. They smell like a recession. Demand destruction's occurring, and price power is going to be very poor. So keeping that margin as you go through this downward slope here is going to be, you know, what great companies do, and I'd like to think our company does it, which is intervene. Manage costs, manage capital, manage yourself through this, keeping your long-term strategy in mind.
All right, Andrew, you've said in the past that when you were here maybe 6 months ago and we talked about how bad things looked here, you said that that was a view from New Yorkers, maybe a view from the other coast, but when you were out there in the real business world, it didn't look like that. What's changed?
Well, I think a lot of very slow action in Washington changed things pretty dramatically. I was very vocal in September, as were a lot of CEOs. What are we doing? We're going to affect the real economy, and here we are. We've affected the real economy. We've effectively shot ourselves in the foot. I mean, so here we go. We've got a credit crisis, and the money's still not flowing. You know, we talk about how it's all solved in Washington. It's still not solved out there. So we're seeing a lot of small companies struggling, and I think this issue, the main economy has caught the flu. And, you know, I actually said what I said back in 6 or 7 months ago because we had a fairly localized issue here in the U.S., the housing crisis, energy, and the whole automotive sector. We saw some effects in some other markets in the United States, but global markets were doing just fine. Today, Europe is in just as bad a shape as the United States. We're seeing slowdowns in China and other parts of Asia and the emerging world, and I think we've successfully affected the main economy.
You talk about how there's not a lot of pricing pressure out there, but you pushed through your price increases of 20%. Are you going to bring those price increases down as hydrocarbon prices come down, or are those prices here and that's how you're going to get your margins?
You sound like my customers, Becky. The answer is, of course, we've had to do that already. I mean, especially on the commodity side.
You've pulled back already?
As anyone who runs a... Well, not fully. I mean, in essence, what we've had to do is, remember, our portfolio is about half commodities, half specialties. So the commodities pretty much quickly attenuate to the input costs, and so those prices are coming down very fast. The specialty businesses, though, are hanging on because, as you would imagine, they're value priced. And as you know, the Dow strategy is to move to more specialty businesses because the volatility of the last 4 years has been a real big issue. And I want to keep reminding people, even though I said what I said, $63 oil is still a heck of a lot way north than $20 oil. Sure. And $6.50 gas is still way north of $2 gas. which is what people like Jack would remember from the 90s.
Yeah, but Andrew, in terms of those 20% price increases that you've come on our program and talked about how you were pushing that through to customers like a Procter & Gamble. Does Procter & Gamble now say, okay, we're not going to pay the 20% increase?
There isn't one customer out there that isn't asking for price drops in what's going on right now, Becky. So pricing power, I mean, there's no pricing power in any of the commodities. And frankly, some of the specialties, you use Procter & Gamble as an example. I won't speak specifically to them, but I will say companies that buy specialty goods are asking for relief.
Are they getting it? They're getting in some form?
Varies by business and varies by the value add of the product in the end use. But in some cases they are, yes.
Yeah, okay.
Andrew, I know you talked about how long this might last. Obviously, the next few quarters are going to be rough. But are you able to see through this yet? And if so, where's the recovery going to be led from? Is it going to be domestic? Are some of these emerging markets going to somehow pull out of this tailspin and help the U.S. from an outside source?
Yeah, Carl, remember we were in China and we said, what's post-Olympics China going to be like? And we've all now seen post-Olympics China has slowed down considerably. But I do believe, well, firstly to your first question, no, I can't see through it yet. We can't see through it yet. It's very, very cloudy. A few quarters here are going to be very rough. But to your second question, I think China's going to help us out of this. I mean, local stimulus in China, as that takes effect, they've got a lot of money. They've got a big population that they've got to keep growing. They can't go below a certain GDP number, and they're starting to think that 8 or 9% GDP is very likely for them. So they're going to stimulate. I'm going to be there next week, and as head of the U.S.-China Business Council, we're going to have a discussion about that. I think that will stimulate. I'm hopeful our new leader here in the United States and his new team will find some things they can do, but, you know, I'm not overly hopeful of that. Frankly, I think the emerging world's going to help us out of this.
Hey, Andrew, it's Joe. A lot of the corporate debt is the spreads have really widened lately. I don't know what it's saying necessarily, but I look at your company, and we talked about what dividend yield for the overall market is attractive, and we said, you know, some people think 7%. Well, you can buy Dow right now with a 7.5% yield. Your stock's at 22, down from 45. If I was sure that you were going to keep paying that dividend and that there's nothing in the credit markets or in the global economy that could cause you to cut that dividend or that could, you know, threaten the long-term viability of Dow Chemical, that would seem to be a pretty good investment. 7.6% to wait for an appreciation back to more normal levels. Can you convince me that that dividend is safe forever?
Sure, I can. Firstly, 388 consecutive quarters of never cutting the dividend. I will tell you this CEO will never cut the dividend. There's just no logic to our yield right now. Stocks have decoupled from the companies universally. I mean, everyone's being punished somewhat equally. You look at our dividend yield, and you look at our record of paying dividend, you know, it is absolutely ludicrous that our stock price is sitting where it is. But as I said, my stock price has got nothing to do with the reality of the quality of the balance sheet, the quality of our cash flows, the quality of our portfolio, our quality of reward to the shareholders, including obviously our dividend. And so I think Warren Buffett is doing an amazingly brilliant thing.
For people, Andrew, that are waiting for that 7%, 8% yield in the blue chip sector, well, you would have to say maybe Dow Chemical is a blue chip that has already reached that level of valuation in terms of a dividend yield.
That's what we think, and frankly, go forward from here, we're going to remain strong. We do have, as you know, Warren Buffett and the Kuwait Investment Authority as part of our Roman Haas deal. They are moving forward. We've got tremendous financing lined up for that deal. We have oversubscribed our bridge finance facility, 19 banks. We're going to emerge out of that deal with the close of the Kuwait deal with a debt-to-total cap of around 40% or thereabouts. Good cash flows, a transformed portfolio, a high dividend yield, financial flexibility to do more things, i.e. reward our shareholders, whether that be share buyback or other financial engineering. So I think, as I said, the stock's decoupled from the reality of the company.
Joe, there are a lot of companies not as positive as this, but have the same story of strong dividends, strong management doing a hell of a job. I mean, Andrew, you're on the right side of the curve here now, if anything, though. It's nice to have those price increases in to give up gradually while you get that nice hit from raw materials. I like where you're sitting.
Andrew, we want to
thank you, Jack. I just want to thank Jack. He knows very well how to run a successful plastics business, and he was a tremendous leader and mentor to many people like me at Dow. And just want to say how smart you guys are to have him on your show.
Well, thank you. We feel lucky to have both of you here today. And Andrew, I want to thank you very much for your time. Again, Andrew Liveris with Dow Chemical.